This market is hot, 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 hot. In the Metro Detroit area, homes are flying off the market pretty quickly, and you have to be ready and you have to have your tools in place to know what to do and how to get your offer through above the noise. So let's talk about the appraisal contingency. I've been seeing purchase agreements come in, and the appraisal contingency is waived. Real estate agents, buyers, what does this mean? Well, let's talk about it. It simply means that you are agreeing that no matter what the appraisal comes back for, you're agreeing to waive your right to get your earnest money deposit back. Because typically on an appraisal waiver, on an appraisal guarantee that the house has to appraise for at least for the purchase price, or you have the option of backing out of the contract and getting your earnest money deposit returned to you and then going on to another house. If you waive that appraisal contingency guarantee, what that means is that you are saying you're going to buy the house no matter what the appraised value is, or sacrifice your earnest money deposit. So let's do an example. Let's say that you buy a house and it's $300,000 and the appraised value comes back at $290,000. Well, a lender is only going to lend you based on the lower of the two. So that's that $290,000. And they're going to lend you 3%, 5%, 20% down if you want to avoid PMI insurance. And so they'll lend you based on that $290,000. And then you have to bring that extra $10,000 to the closing table if you have a short appraisal. It does not mean that you can waive the appraisal. I have a lot of misconceptions. Real estate agents, borrowers will come to me and say, hey, I waived the appraisal contingency, so I don't need an appraisal. We can move forward from there. That is definitely not the case. You're saying that no matter what it does appraise for, you're agreeing to not get your earnest money deposit back and to proceed forward with the house, regardless of the appraised value. So, with that being said, there is a part 2 to this, and that's called property inspection waivers. There are times where a lender gets a PIW, property inspection waiver. Number 1, it's only for conventional loans. That's the only time this is granted. And so that's loan amounts that finance conventional up to $548,250. And so with this property inspection waiver, what happens is you get an offer accepted, and it's your information as the borrower and the property information is put into your application and then exported to either Fannie Mae or Freddie Mac. And it's called an automated underwriting system, AUS. And we run the loan approval through the AUS system through Fannie Mae or Freddie Mac, where all conventional financing comes from, and it dictates to us. It's not the seller, it's not the buyer, it's not the lender, and it's not the real estate agent that determines if an appraisal is not needed. It's an automatic underwriting system from Fannie Mae and Freddie Mac. So we input the information, and if we get a PIW, property inspection waiver, then you don't need an appraisal. It doesn't mean that you can't have one, it means that you have the option of not having one. So after we get a property inspection waiver, I go back to the borrower and I explain what we have, and ask them, do you want to waive the appraisal because you don't need it, or do you want to still, hi Chloe, or do you want to still get your appraisal done? And if you do get it done and it comes back short, you can't then option for the property inspection waiver. You have to take on the appraisal. So it is a hot market. When people are putting in 3, 4, 5 offers, it's good to know what your options are and what they look like. And today was a lot of information on appraisal waivers and appraisal guarantees, but I think that this is definitely information that's really important. Thanks for watching. Say bye, Chloe. She's pretty talkative today. Please like, share, and subscribe to this video. We would love that. Thank you for watching.